Apple's earnings are out, and there's not a lot of surprises in the results. I did a video earlier this week saying that Apple is really struggling to find areas of growth outside of their services business. And that's exactly what we saw in the fourth quarter of 2023. The interesting thing is that the market didn't really particularly care. Apple beat analyst estimates, and that's really what the game is right now for Apple. But I still question why investors are paying 30 times earnings for a company that is effectively no growth in its core business. So that's what I'm going to dig into today is what exactly the numbers were for the quarter and why I think we should be concerned about Apple's valuation as investors, because this is no longer a growth stock. This is really a company that's just trying to squeeze as much money as it can out of the ecosystem that it has. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Go to fool.com/ASYM for their top 10 stocks to buy right now. I'm going to just cover the high level numbers from the press release and then get into some of the detailed segments and particularly product revenue numbers, because the trends there are what I think is really concerning. This is a high level look at the numbers, and you can see that product revenue was essentially flat from a year ago. Services revenue was up really nicely. That's a theme with Apple right now, is that services revenue is really driving most of the company's growth. But overall, about $2.5 billion worth of revenue growth to $119.6 billion in revenue. Gross margins, once again, really strong, $54.9 billion. And profitability continues to be really good at Apple. It shouldn't be any huge surprise, $33.9 billion worth of net income, or $2.18 per share. But getting into the segment results is where I think things get a little bit more concerning for Apple. I'm going to start with their iPhone revenue, and this is a look at the last 12-month revenue on a quarterly basis. So each one of these bars is an annual number for the last 12 months. And you can see that the revenue numbers have essentially been flat for more than 2 years now. There was growth throughout the pandemic. Apple has maintained that growth, hasn't lost it like a lot of companies have coming out of the pandemic, but we're not growing again. And what management said during the conference call is that the first quarter they're expecting to be essentially flat from a year ago after taking out about a $5 billion impact from COVID, particularly shutdowns in China. I'm going to read this quote directly. As a reminder, in the December quarter, a year ago, we faced significant supply constraints on the iPhone 14 Pro and 14 Pro Max due to COVID-19 factory shutdowns. Those were shutdowns that happened in China. And in the March quarter a year ago, we were able to replenish channel inventory and fulfill significant pent-up demand from those constraints. We estimate that this impact added close to $5 billion in the March quarter total revenue. When we remove this impact from last year's revenue, we expect our March quarter total company revenue and iPhone revenue to be similar to a year ago. Now, that is total revenue. That's not just iPhone revenue. That's total revenue. But the impact of that iPhone revenue for the first quarter in calendar 2023 is going to be offset. And now we're going to see flat revenue on a comparable basis. That means that growth in the services business is being overcome by losses in the product segment. I covered the iPhone already, but let's go to some of the other products. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is Apple's Mac revenue over the last few years. Again, last 12-month results. And you can see that revenue has been declining sharply for more than a year now. Peaked at $40.2 billion in annualized revenue, now down to $29.4 billion in revenue. We see a similar story with the iPad. The iPad peaked in the December 2022 quarter, and it's been declining ever since. One point of strength for Apple over the last 5 or so years has been wearables, particularly growth from the AirPods. But that again is starting to come to an end. Revenue since the September 2022 quarter has been on the decline. This isn't quite the same sharp decline that we saw with Macs or with iPads, but there is a decline in revenue over this period. So where is growth coming from? Well, that is very clear. Growth is coming from the services segment. And this is all kinds of services that Apple has. This is the revenue they generate from the App Store. It's revenue they generate from Google searches and the potentially $20 billion a year that they're making from Google search, Apple payments, Apple TV, all of those products that kind of don't fall into those traditional product categories. Those are services revenue. And you can see that this is what has grown over the past decade. It has really driven Apple's growth. And that's why the company isn't shrinking right now, is because services revenue is starting to offset some of the losses in hardware sales. But long term, this is ultimately a really a concern for Apple because these services revenue are like squeezing money from the ecosystem. Developers are paying the 30% fee in the App Store. Apple's charging Google to be the primary search engine in Safari. So Apple's not adding value there. They're just providing a customer to Google and Google's paying for it. What Apple's job ultimately is to create products that people love and want to pay for. And their products are extremely popular. The iPhone is still one of the most popular products in the world. The ecosystem with the iPads, Macs, AirPods, Apple Watch are all phenomenal. But that doesn't mean that this is a growth business just because people love their products. And that's what I think the problem is for investors right now, is this stock has been on such a long run and it's gotten to such a valuation that investors are just assuming that Apple is going to continue to grow in the future. And I don't think that's the case. We're seeing with the guidance numbers for the first quarter that growth in services is likely going to be offset in losses for hardware sales. And that's a really troubling position for Apple to be in. I'm not predicting the company is going to be in decline long term. I still think there's a lot of ways that Apple is differentiated from a lot of their competitors. But this happens in hardware sales where you hit a point of scale where there's simply nowhere else to grow. We may see China start to shut off some of Apple's sales in their country. So maybe that will put further pressure on the company. We have seen competitors get a lot better in smartphones. And I think Apple's differentiation is just shrinking. It's not quite as differentiated in the market today as it was just a few years ago. So that's what's really troubling for Apple, is that we're starting to see in the numbers that this is no longer a growth company. Let's just go through a few of these valuation metrics because I think they're really important. On a price to earnings multiple perspective, Apple's trading for over 30 times earnings. If you look at a forward basis, so this is based on analyst estimates for the next year, the multiple goes down to 28.5, but that shows you that there's not a lot of growth here. A company that was growing faster would see that PE multiple come down further on a forward-looking basis. Enterprise value to sales is over 7, both on a trailing 12-month basis and a forward-looking basis. Even price to free cash flow is 29. And free cash flow is always one of Apple's strengths. So if that's not going to be a good value, I think it's hard to see a value in the stock right now. So that is what the mismatch is to me from Apple's perspective. And it was reinforced with these quarterly results. I don't see where Apple is going to get its next phase of growth from. The Apple Vision Pro is likely years away from being a real significant contributor to the bottom line, if it ever is. And in the meantime, the core products that Apple has built its business on look like they're at least starting a slow and steady decline. But what do you think about Apple's results and where the stock is trading today? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.